Today, we move on to the next form of analysis, and that is called common size statements. So this concept you understand through a very, very simple example. Okay, let's consider the balance sheet, and that too only the liability side of the balance sheet. In this chapter, that is known as sources of funds. Now, under sources of funds, you know that there are only two parts. One is owner's funds and borrowed funds. So let's take some figures for understanding. Let's say owner's funds are 400 rupees and borrowed funds are 600 rupees. That's it. The liability side is over. So if you take the total of the liability side, you will see that it amounts to 1000. Now what analysis you are doing here is check how much of your total funds, if you see is 1000, how much out of that total funds has come from the owner and is come from borrowings. Okay, to do that you have to calculate percentage again. Okay, and how do you calculate? Your total funds is going to be the base. Okay, and you have to calculate a percentage for each of the items there, that is owner's funds and borrowed funds. How do you do that? To calculate for owner's funds, what you will do is take owner's funds 400, divide by the total funds, that is 1000, and because you want a percentage, multiply by 100. If you calculate, that comes to 40%. Same thing you do with borrowed funds. How much percentage of total funds has come from borrowings? If you want to find out, take borrowings 600, divide by the total 1000 into 100 to get a percentage, and that is 60%. So what was your base over here? Your base was total funds. That comes to 100%. Out of your total funds, how much is from owner's funds? Look here and say 40% of total funds has come from the owner. 60% has come in the form of borrowed funds. This is known as common size statement. I have only shown you the liability side. Same thing you will do even on the asset side. Take each item, okay, and get a percentage of the total funds. In this case, this is total funds available. When you are on the asset side, it will be a percentage of total funds applied. So there you will take each asset and divide by total funds applied and get it as a percentage. This is what you do in common size statement. Both this example I've shown you only for the balance sheet. Later on, we will be doing it also for the income statement. But there, the rule is a little different. We will see that when we come to income statement. Now, we will take an example and see how to solve this common size statement only for the balance sheet. So what I want you to do is come to page number 355 in your textbook. We will take a very simple example and see how this works. Page number 355, this question number 7 we will be solving. Okay, let us first read and see what information is given, and then accordingly we will see what is required to be drawn. Balance sheet of XYZ Limited for the year ending 31st March 2020 is given below. We have to firstly convert this into the vertical format, and then whatever is required, that comes later. So I'm just going to group these items for understanding. If you start from the liability side, equity share capital, preference share capital, reserves and surplus, all will come under the head owners funds. But because this is a company, you see the word equity share and preference share, this is a company, we will call it shareholders funds. So this will come under the owners funds category. Then secured loans, unsecured loans, these are borrowings. The moment you see the word loan means you have borrowed money. Both of these will come under borrowed funds, and that's it. Liability side is over. Sources of funds is only this much. Move on to the asset side. Fixed asset, investment, by itself you will write, and current asset, this current liability will go on the other side as minus current liability. Together they will be called working capital. You are required to prepare common size statement for the year ending 31st March 2020. Okay. Now, how do you prepare? Two columns only are required. One is the amount column and one is the percentage column. So for about 15 lines, you draw this format. Along with particulars, two columns you draw. One for amount and one for percentage. Okay, on top you write there common size balance sheet. And the year is given there, common size balance sheet as on 31st March 2020. The format that we have been using, the same format we will be continuing today also. Percentage we are going to calculate right at the end. First, let us complete the entire balance sheet. So let's begin now. Starting with the liability side, which is known as sources of funds. Roman number 1, write down sources of funds. Then there are only two sources, owners funds, borrowed funds. So point number A, write down shareholders funds. Under shareholders funds, two things are there, remember, capital and all your profits. Capital in this case will be known as share capital. So write A, share capital, which is of two types, equity shares and preference shares. So take the liability side, the first item there, equity share capital, right down below this. Equity share capital. Amount is 9 lakhs. Then below that, preference share capital. And that is 80,000. Percentages we are going to calculate later at the end. Okay. Then you have reserves and surplus. So call that B, reserves and surplus. Reserves and surplus 1,50,000. That's it. Shareholders funds over. The next two items, secured and unsecured loan, both are borrowings. We will put it under the head B, borrowed funds. Borrowed funds, write down. Firstly, secured loan. Secured loan amount is 3 lakhs. And below that you have unsecured loan. Amount is 2 lakhs. Okay, that's it. Your sources of fund side is complete. Take the total and call it total funds available. Yes, anybody with the total? Add up. Total funds available.
16,30,000.
9, 10, 15 and 130. 16,30,000. Correct. Okay. What we will do is calculate percentages now for each of these items of the sources of fund side. So all of them are going to have a percentage starting with the first item, and that is equity share capital. How much percentage of your total funds has come from equity share capital? If you want to find out, you have to take equity share capital, that is 9 lakhs, divide by your total funds available, 16,30,000 into 100. Calculate and tell me what percentage that is. 9 lakhs divided by 16,30,000 into 100.
55.21%.
That comes to 55.21%. Okay. Write that in the percentage column. 55.21%. Same thing you have to continue and find out for each item there. The next item is preference share capital. What will happen? Only the numerator is going to change. 9 lakhs now will be replaced by 80,000. The base remains the same. 16,30,000 is total funds available. So calculate 80,000 now divided by 16,30,000 into 100.
4.9%.
If it's in points, preferably tell me up to 2 digits. 4.90.
It's 4.90%.
Okay, 4.90%. Then the next is reserves and surplus continue to do the same thing. Base remains the same. The numerator now is 1,50,000 divided by 16,30,000 into 100. Yeah, how much is that? Yeah, what is the answer? 1,50,000 divided by 16,30,000 into 100.
9.20%?
Yes, sir.
Okay, 9.20%. You said 20, correct? 9.20%.
Yes, sir.
Okay. Then continue further. Next is secured loans. So again, only the numerator is going to change. 3 lakhs divided by 16,30,000 into 100.
18.40.
18.40.
69.32.
Okay, 2 answers I'm getting.
18.40.
Yeah, I think it is 18.40%. How did I get 18.4? If reserves and surplus 150 was 9.2, exactly double is secured loan 3 lakhs. So even the percentage will double. That is 18.40. Okay. And the last item there, unsecured loans. So 2 lakhs divided by 16,30,000 into 100 comes to how much?
12.26.
27.
12.26 or 27. What is it?
It's 269.
Okay, so 27%. And the total will be 100%. If you add up and check, your total should come to 100%. That's it. Sources of funds over. Same thing you have to continue on the application of fund side. So firstly, we will complete writing the application of funds, then later we will calculate the percentages. So write down Roman number 2, application of funds. Starting with fixed assets. So write down point number 1. Fixed assets. Now come to the asset side in the question and just copy. Fixed assets are 9 lakhs. Then below that you have investments. So point number 2, investments. 1,50,000 is the amount. And 2 items are remaining. On the asset side, you have current assets, liability side, current liabilities. Point number 3, both of them put together known as working capital. So below working capital, you write down firstly current assets, that is 7,30,000. And then you have minus current liabilities. Current liabilities, that is 1,50,000. That's it. Application of fund side is over. You take the total and call it total funds available. Sorry, total funds applied on this side. Total funds applied. Now, because you shouldn't get confused, that last item, current liabilities, you have to minus. So I'll just put it in a bracket and take the total. Is it 16,30,000? Assets should be equal to liabilities. So total is coming to 16 lakh.
Yes, sir.
Yeah. Now time to calculate percentage. The method remains the same. What is your base this time? Total funds applied is your base. So 16,30,000 is going to be in the denominator. Take each item and write it in the numerator, multiply by 100 to get a percentage. Starting with the first item, and that is fixed assets. That will be 9 lakhs divided by 16,30,000 into 100. Again, don't calculate. Look on the liability side. Did you calculate a similar percentage? Your equity share capital also was 9 lakhs divided by the same base 16,30,000. What was the percentage there? 55.21. So what? Just plain copy 55.21%. Make your work easier. If you have already calculated that same percentage before, then just copy. The next, investments, 1,50,000. You want to calculate a percentage, divide by the total 16,30,000 multiply by 100. This also you have calculated. Have a look at reserves and surplus. It was 1,50,000 divided by 16,30,000 into 100 when you calculated, and that percentage was 9.20%. So again, for investments, it will be the same 9.20%. Once calculated, again, don't waste time calculating. But now 7,30,000, which is current assets, that is there by itself. You have not calculated earlier, so that we will have to calculate now. 7,30,000 divided by 16,30,000 into 100. Divide and tell me up to 2 digits what is the answer in percentage.
44.78%.
44.78%.
44.78%. Okay. And then the next current liability is 1,50,000. That is already calculated. For investments also it was 1,50,000. Current liability is also 1,50,000, which means this is also going to be 9.20%. They're same. Only difference is because you're going to minus current liabilities, put that in a bracket so that you don't make a mistake. If you add up and check, this total also should come to 100%. You can add up the percentage column and see. You get 100% over there. So that was calculation of common size statement. What you have to do is when you are on the liability side, take the total as the base. That in that case, it is total funds available. When you are on the asset side, take total funds applied as the base and take each item at a time, divide and get a percentage there. In the end, okay, your assets and liabilities, that is 100%. And your total also should come to 100%. Okay, this was a simple one wherein only 1 year was given. Now let's come to the exercise where you have to do the same thing, but for 2 years together. Okay, so come to the exercise and page number 378. Question number 7 you come to. Okay. If you look at the last line, same question is given there. Prepare common size balance sheet, but for 2 years, 31st March 17 and 31st March 2018. Read first and then we will prepare. Preparation this time is going to be different because 2 years you have to calculate. Okay, so have a look what is given there. Following is the balance sheet of Sakshi traders for the 2 years 17 and 18. Starting with the liability side, equity share capital, preference share capital, reserves and surplus. All three under owners funds, that is shareholders funds. Next two items, same, secured and unsecured loan, both are borrowed funds. Current liabilities always goes on the other side below current assets. So fixed assets by itself, investments by itself, and current asset minus current liabilities will give you working capital. Okay, now how do you prepare when you have to prepare for 2 years? Remember, 2 years means you'll require 4 columns. One amount, one percentage for 2017, and same percentage and amount for 2018. So same size what you required right now, except that you have to draw 4 columns at the end. Particulars and 4 columns. Write everything neatly there. The 2 years, 31st March 17 and 31st March 18. One column for amount and one column for percentage. On top you write down comparative balance sheet. Comparative balance sheet of Sakshi traders as on 31st March 17 and 31st March 18. The liability side on top, sources of funds. Then under that, there are two heads. The first one, shareholders funds. Below that, share capital, which is of two types in this question, equity and preference. So below share capital, write down equity share capital have a look in the question. Equity share capital in both columns 17 and 18, the amount is 80,000. Only write in the amount column. So it will be in the first column 80,000 and directly in the third column 80,000. Then move to the next item, and that is preference share capital. Preference share capital in 2017, 20,000, and 2018 also 20,000. Then the next item, right, B, reserves and surplus. For 2017, 20,000, but 2018 it is 24,000. That's it. Shareholders funds is over. The next, the two loans, secured and unsecured, will be under borrowed funds. Write down B, borrowed funds. And write down first one, secured loan. First column 40,000, and next for 2018 16,000. Then below that, unsecured loan. $20,000 and $36,000. Over. Sources of funds is done. Take the total in both columns. Call that total funds available. Anybody has taken 2017 total?
1,80,000.
1,80,000.
Correct. 1,80,000. And what about 2018?
1,76,000.
1,76,000. Okay. For the sources of fund side, let us calculate percentages. But now be very careful. Take only 2017. Okay. So the base is going to be 1,80,000. That is the total funds available. Now take each item there and calculate a percentage. How much of your total funds has come from equity share capital? If you want to find out, take that in the numerator. Equity share capital 80,000 divided by 1,80,000 into 100 will give you a percentage. Calculate and tell me.
44.44%.
44.44%. Next item is preference share capital. Only the numerator changes in the formula. Now it will be 20,000 divided by 1,80,000 into 100.
11.11%.
That's right, 11.11%. The next, if you see reserves and surplus, also 20,000. No need to calculate. Just now you calculated. It will remain the same, and that is 11.11%. The next item, secured loan, will be 40,000 divided by 1,80,000 into 100. Instead of calculating, you know that for 20,000, it was 11.11. So for 40,000, it should be double. How much?
22.22%.
22.22%. And then the last item, that is unsecured loan. 20,000, again, that also you have calculated on top, 11.11%. That's it, done. If you take the total, that should come to 100%. Okay, 2018 is over. The next, for 2017 is over. For 2018, the base now is changing. 1,76,000 is the total funds available. Starting from the top, firstly, equity share capital 80,000 divided by 176 into 100. Calculate and tell me what is the percentage.
45.45%.
45.45%. Then the next is preference share capital, which is 20,000. So 20,000 divided by 1,76,000 into 100.
11.36%.
11.36%. Okay. Then move on to the next. That is reserves and surplus. That is 24,000 now. Divided by 1,76,000 into 100.
13.63%.
13.63%. Then secured loan is 16,000. Numerator will change. 16,000 divided by 1,76,000.
9.09%.
9.09%. And then the last 36,000 unsecured loan divided by total 1,76,000 into 100.
20.45%.
20.45%. Total, that is 100%. Okay. Sources of funds complete. Let's move on to the next, and that is application of funds. Write down Roman number 2. Application of funds. Again, let's copy the amounts first, percentages at the end. Starting with the first, that is fixed assets. For 2017, it is 1,20,000. And 18, it is 1,44,000. Point number 2, next, investments. Investments for both years is the same, and that is 20,000. Then you have two items, current assets and current liabilities, put together known as working capital. Right down below that, current assets 60,000 and 48,000. And below that, minus current liabilities. $20,000 and $36,000. To avoid confusion, I'm putting those figures in a bracket. You know you have to subtract current liabilities. Okay. Take the total and call it total funds applied. Should match with total funds available. So just have a look. Is it 1,80,000 and 1,76,000?
Yes, sir.
Okay.
Yes, sir.
Yeah, it has to match. Now, time to calculate percentages. Stick to only 2017 first. The base total funds applied is 1,80,000. Starting with the first item there, fixed asset, which is 1,20,000. Multiply by 100 and get a percentage.
66.66.
66.66%. So if you round off, that comes to 66.67%. 6666 is recurring. Round off to the next 67%. Okay. Then the next is investments, which is 20,000. Will you again calculate? Don't do that. Unsecured loan, if you see on top, when you are calculating, it was the same, 20 divided by 1,80,000. And now also you're doing the same thing, 20 divided by 1,80,000. The answer is going to be the same, and that is 11.11%. Then the next is current assets, which is 60,000. So this time it is going to be 60,000 divided by 180 into 100. You can calculate, or there is a shortcut.
33.33%.
Yes, if 20,000 is 11.11, 60,000 will be 3 times that amount, 33.33%. And then the last item, current liabilities, 20,000 again, which is already calculated on top. Only change, you will write it in a bracket, that is 11.11%. Same. If you take the total, that comes to 100%. And now we will move on to the next year, that is 2018. This time the base is 1,76,000. Starting from the top, fixed assets is 1,44,000. Multiply by 100 to get a percentage. Divide and tell me how much is that?
%81.81%.
81.81%. The next item is investments, which will be 20,000 divided by 176 into 100. I think on top you have already calculated that figure. When you calculated preference share for the second year, it was the same. 20,000 divided by 176. Don't calculate again. It is 11.36%. Then the next item. Current assets 48,000 divided by 1,76,000 into 100.
27.27%.
27.27%. And then the last item, current liabilities, no need to calculate. If you look on top, unsecured loan, that also was 36,000 divided by 1,76,000. You had got 20.45%. Here also it will be 20.45%. Only thing, put it in a bracket because current liabilities have to be subtracted. If you add up, you should get the total as 100%. The next now is preparing common size income statement. So as usual, whatever was the format of income statement that we will prepare, except you are also going to calculate percentages. And here, now the way of calculating percentage is going to change. Okay, so how to do that? First, what we know we will complete, that is preparation of vertical income statement. Have a look at question number 8 over here. Prepare common size income statement for 2 years for the year ended 31st March 17 and 31st March 2018. What are the particulars there? Sales, which is your income, start from there. The first relating to all your direct expenses is cost of goods sold minus and get gross profit. And then from gross profit, deduct both those two items, office and administrative expenses and selling and distribution expenses, which are known as operating expenses, minus that and get net profit. Okay, so final answer, net profit, and that is the order you are going to solve in. So let's prepare same type of format. Remember, 4 columns will be removed. 2017 rupees and percentage, 2018 rupees and percentage. So what you drew just now, same thing you continue to draw, except because it is income statement, the space required will be less. About 8 lines should be sufficient. Particulars and 4 columns. Okay, question number 8 is what we are solving right on top. Comparative income statement. Sorry, not comparative. We are solving today common size. So write on common size income statement. For the year ended. The 2 years, 31st March 2017 and 31st March 2018. If you can remember the format, very good. Otherwise, look at the previous pages and see how we prepared income statement in the vertical format. All incomes on top minus all expenses. So starting with sales, write down only amounts to be written first. Sales for 2017, it is 2 lakhs. And for 2018, 2,50,000. From that, you will minus cost of goods sold. So write down less cost of goods sold. One lakh 50 and 1,70,000. When you deduct, the first answer that you get is gross profit. How much is gross profit for the 2 years? Tell me. For 2017, is it 50,000? What about 2018?
80,000.
80,000. Okay. Then you have less all your operating expenses. Operating expenses here, two types. First is office and admin expenses. For the first year, 4,000, and second year, 6,000. Then the next is selling and distribution expenses. That also comes under operating expenses. Selling and distribution expenses. $6,000 and $1,000. That's it. You deduct both these and you get net profit. Tell me, for 2017, what is the net profit?
40,000.
40,000. And 2018?
73,000.
73,000. Good. That's it. Income statement is over. Now, how do you calculate percentage? Okay. In this case, your base is going to be sales always. Okay. Your denominator, the base, is going to be sales. If we talk about 2017, sales is 2 lakh rupees. Then take all other items and get it as a percentage of sales. Okay. So 2 lakhs will remain constant in the denominator. What will keep changing? Each of these items: cost of goods sold, office and admin expense, selling and distribution expense, and net profit. All will be in the numerator. Okay. So let's calculate. If sales is the base, that means 100% will be sales. All other items, okay, will now be calculated as a percentage of sales. So starting with cost of goods sold for 2017, if you look, 1,50,000, that will be in the denominator. Sorry, in the numerator. 1,50,000 divided by 2 lakhs into 100. Calculate and get a percentage.
75%.
75%. Then each figure you have to take. So even gross profit will be calculated. That is 50,000. So 50,000 divided by 2 lakhs into 100.
25%.
25%. And I'll tell you, it matches also. Okay. Sales minus cost of goods sold gives you gross profit. If you look at the percentage column also, it matches. 100 minus 75 is 25%. Okay. Continue further. The next figure you see is of office and admin expense, which is 4,000. So 4,000 divided by 2 lakhs into 100. What percent?
Two percent.
2%.
That's right. Then the next is selling and distribution, which is 6,000 divided by 2 lakhs into 100.
3%.
3%. And then the last, net profit, 40,000 divided by 2 lakhs into 100.
20%.
20%. Again, if you want to have a look, it matches gross profit minus all your operating expense. 25 minus 2 and minus 3 is 20%. So that way also it matches. Let's do the same thing for the next year, that is 2018. What is the base? Sales is the base. So that always will be 100%. This time your denominator is going to be 2,50,000. And now take each item, put it in the numerator and get a percentage. Starting with cost of goods sold. That is 1,70,000 divided by 250 into 100.
68%.
68%. Okay. Now, if you don't want to calculate, just minus and get, you will get gross profit as a percentage. But if you want to cross verify, it will be 80,000 divided by 2,50,000 into 100.
32%.
32%. Both ways it comes 32. Whether you calculate as a percentage or minus sales, okay, sales minus gross cost of goods sold, also it comes to 32%. Move on to the next, office and admin expenses, which is 6,000. 6,000 divided by 2,50,000 into 100.
2.4%.
2.4%. That's right. And finally, selling and distribution, which is 1,000 divided by 2,50,000 into 100.
0.4%.
0.4%. Correct. 0.4%. Net profit, two ways of calculating. Either you take 73,000 divided by 2,50,000 into 100 or minus both the operating expense and get it as a percentage. Yes, how much is that?
29.2%.
29.2%. Both ways you will get the same answer. Either you do this calculation or from 32, you minus both those figures, 2.4 and 0.4, you will get 29.2%. So compared to balance sheet, okay, income statement is much easier when it comes to common size statements. Items are less, calculation is easier. What is important is to know that sales is your base. All other percentages are to be calculated with respect to sales. Take sales as the base, means sales will be 100%. All other figures, take sales in the base, take those items in the numerator and get a percentage. So that was the solution of question number 8.